Did you know how the pandemic benefited American billionaires? They earned $434 billion during those couple of years. It was the idea that everyone might suffer in one way or another, even billionaires, because the entire nation was in lockdown. However, the exact opposite happened. Jeff Bezos added $35 billion to his net worth since the pandemic started, and even witnessed his net worth hit a record high of $189 billion. Zuckerberg was also one of the biggest gainers. He added over $25 billion to his net worth in this pandemic. Those numbers are incomprehensive to ordinary people. And that's not a coincidence. The modern capitalistic world we've built over the centuries is designed to favor the rich over, let's say, the not-so-fortunate. It's actually much more expensive to be poor than rich. It might sound a bit hard to digest, but the fact of the matter is that when you have extra money sitting in your bank account, a lot of things suddenly get cheaper. There are a few ideas that can be taken into account. Leverage. The tool that keeps the rich richer. If you've ever tried to get a loan from your local bank, they probably ask you to check your credit score. As a bank, you want to lend money to people who are financially responsible and have the means to pay back the loan, plus interest on top of that, which is the whole purpose of a bank. So they'll check your credit history, your income, maybe your assets, and based on all of that, they'll base their decision on whether to give you a mortgage. If you have a low credit score or low income, you might be rejected and end up renting instead of becoming a homeowner, even if that means waiting for 25 years for complete ownership. But let's say you're an amateur with an average salary and with a decent credit score, and let's say the bank approves your mortgage. You can expect a mortgage rate of 3 to 4%, which is not bad. But do you know what Zuckerberg's mortgage rate is? Just 1%. Yeah, this sounds insane. This guy has a net worth of $90 billion. Why on earth would the bank charge him 1%, and someone who's struggling financially and barely making ends meet, the bank would charge him like 4%? In fact, the inflation rate is around 2 to 3%. How's that even possible? It might not make sense to you, but that's how it works. The reason behind this low of an interest rate to Mark is because lending a few $1 million to Zuckerberg isn't risky at all. Obviously, he can pay his mortgage easily at any point. He can even buy the bank maybe, while you, who are hardly making your monthly payments, can default on your loan. So the bigger risk, the more they're going to charge you. This, of course, is an extreme example. Comparing one of the richest people to an average person isn't fair. But even if you're moderately rich, let's say with a net worth of just a few $1 million, you're a much safer bet to financial institutions than your friend Billy who lives paycheck to paycheck. Considering that purchasing a house is the biggest transaction in most people's lives, your house is going to cost much less if you're rich compared to someone who has a lower income. That's just part of the equation. Let's say you have $25,000. What are your investment options if you want to buy a house and rent it out? You probably need a lot more. The median house price in the US is around $200,000. It'll take you a lifetime to save another $175,000. But if you're rich, with your $25,000, you can make an investment that's worth $200,000. Any bank would gladly provide you with a mortgage even if you plan to rent it out and pocket the difference after deducing all of your expenses and create another source of cash flow. The exact same $25,000 is worth a lot more in the hands of a rich person than in a poor person. Because if you have low income and already have a mortgage, chances that the bank will approve another mortgage are extremely low. What's also quite interesting is that since it's a mortgage, you can deduct it from your income and avoid paying taxes. While as a poor person, you'll have to pay every dime in taxes. Let's say you have $1 million in cash and you want to invest it in real estate. The logical option is to buy a property and then rent it out. But why do that when you can head to your local bank and use leverage to purchase real estate worth $5 million and create an even bigger source of income. Let's say you came across an opportunity to purchase a car for $10,000. You buy the car and turn around and sell it for $11,000. There you go. You just made $1,000 in profit. But here's a better idea. If you use leverage, you can borrow $990,000, and now you have $1 million. You turn around and buy 100 cars and sell them for $1.1 million. After paying back your bank the $990,000 plus interest, which amounts to $10,000, and if we deduct the initial $10,000 you've used, you're left with $90,000 in profit. Leverage allows you to earn 100 times more than you would otherwise. The hidden tax on poor. Our world is not short of wealth. The size of the global economy's almost quintupled over the past 30 years. Yet the gap between rich and poor gets wider, with a massive increase in wealth at the top, while the total wealth owned by those at the bottom is falling. We've already talked about how the rich always find loopholes in tax systems to avoid paying taxes. However, there are other kinds of taxes that we all have to pay, no matter who you are, such as sales tax or property taxes. They're known as regressive taxes, a fixed percentage over particular goods or services. The key word here is a fixed percentage. At first glance, they seem fair. Everyone pays the same percentage, but in reality, poor people pay far more. Regressive taxes don't differentiate rich people from poor people. It doesn't matter whether you're earning $1 billion or $50,000 a year. Both of you are going to pay the exact same $77.50 in taxes. To your fellow billionaire, that's not even money. It's an extremely small percentage of his income. 0.000000775%. But to you, who's earning $50,000 a year, that might be 1 week of groceries. We pay regressive taxes every single day, every time we buy something. The missed opportunity. But the biggest cost by far is the opportunity cost. When you're struggling financially, your primary concern is to put food on the table. You don't have time to think and contemplate to figure out what could be the next big thing. Opportunities are everywhere, but you need the time to figure them out. However, when you barely make ends meet, you don't even think about it and end up missing all those opportunities to make much more money. Even if you want to take advantage of them, you can't afford to take time off because there are lots of other things you need to think about. Whereas if you're financially free, you can take all the time you want and end up earning much more in a very short period. But this concept goes far beyond. It turns into a lifestyle where you're much more price sensitive and end up buying what's cheaper instead of what's really valuable. And no one can blame you for that because every penny makes a huge difference in your lifestyle, especially if you have a family to feed. It's not easy to break the cycle of poverty. But here's a bit of advice that you might want to hear. First, always use a credit card, but use it responsibly, which means never borrow more than what you can pay back and always cover your debts on time. You have to build a good credit score to be trustworthy in the eyes of financial institutions. Secondly, don't be distracted by short-term rewards. Focus on making your time more valuable. Don't be afraid to invest in yourself. A higher price doesn't always mean a better product or service, but always look for more value in return for your time and money. Thanks for watching, and we'll see you next time.